Okay, folks, welcome to Market Wrap. So today was kind of a confusing day in that the Nasdaq was between negative and positive most of the day, mostly positive. But by the end of the day, it took a nosedive. There were some buyers at the close. I struggled all day trying to decide whether or not I wanted to open up short positions. I held off because what I was looking at earlier in the day was the 10-year yield. And we know that technology will do well if the 10-year yield pulls back. And we are down on the day. We are a little bit overbought here relative to the 2 and 3 standard deviation Bollinger Bands. And to see a pullback further would not be shocking. So I want to stress from the outset, I was very small with my short position. The only reason why I put the shorts on is because the daily chart of the SOXL, which is a leveraged ETF putting you short of the semiconductor sector, and Amazon were very bearish. So that's why we put the trade on, because of their chart price action as well as the fact that the Nasdaq sold off late in the day. Now, I'm not 100% confident that the market's just going to go straight down. So we want to stay small. We want to be deliberate. I'll go over those charts in a moment. We'll talk strategy. So the 10-year yield down on the session, the TLT reversed. This is the 20-year bond ETF. It reversed off its lows. We haven't hit critical support yet, and that's just above the 138 mark. We did, I believe, let's validate this. I believe we filled a gap. Yeah, we did, which opened up here back in June. We filled it, but we do have some support back here, so maybe it can hold. So this is pretty good price action. Again, folks, usually I have a pretty firm opinion on where I believe the market is going right now. I don't know. I just didn't want to have zero short positions on, just in case. The tips, they were higher. They faded at the end of the day. Stokes is still weak. The dollar was higher. It faded. It was negative. Then it popped back positive near the close. Stokes is still weak. The VIX in a consolidation here. Very difficult to read. Now, this is the type of market where the best trade is no trade. And if you're going to trade, make it small. The Dow Transports continue to weaken. And this is a perfect chart to illustrate what worries me about this market. All your moving averages are declining. They're going to act as an overhead ceiling on the market, particularly when the 50-day picks up speed to the downside and we get counter trend rallies right up and into it, and you're going to have shorts leaning into, obviously, the short side. Volume rose today. Pretty heavy volume. Stokes rolling over. This is another thing that I want to point out. You know, when you have your Stokes, which were oversold, like back here, and then they rally, yet you put in a lower high, that is very, very bearish. So for all I know, we could hook up and break out tomorrow, but as it stands right now, what do we know? We know that we are rolling over on the stochastics. That means that momentum to the upside is waning and building to the downside. The S&P 500, daily chart, a down day, down a third of a percentage point. And this is another chart, just like the Dow Transports, where you're seeing on your Stokes lower highs, potentially lower highs. This is not as accentuated as the transports in rolling over. Lower highs on RSI. Volume was light. The Dow Jones, I can't remember the last time I saw this, flat on the day. We remain in a triangle formation. Volume was very light. So there was no institutional buying today whatsoever. And again, we're going to memorialize what I fear is setting up, and that's a lower high on Stokes as well as on RSI. The Trip Qs, very bearish. 360 is now resistance. You know, we're going to modify this annotation here, and we're going to move this up to here. Volume was light. The small caps, daily chart, they closed up by a half percentage point. But again, what we're seeing here is potentially lower highs. No breakout. We keep hitting this upper band of resistance and we keep getting rejected. And volume is declining. This is exactly what you don't want to see. You want to see the shares breaking out on rising up volume, and we're not getting it. The banks. Okay, a continuation move up higher here, but we did see resistance at $40.50. Volume was very light. And if yields pull back, expect a pullback in the banks. Technology, down over a half percentage point. RSI, lower highs. Stokes, lower highs. Let's take a quick peek at an intraday chart out of curiosity. We'll go with a 30-minute chart. Yeah, this is not wonderful. Stokes rolling over, RSI can't get above 50. This is a very weak chart. Volume rose into the close. Consumer discretionaries. So this kind of plays into the Amazon trade because right before we went live earlier, I was looking at Zero Hedge and it stuck in the back of my mind as the market began to roll over. And I saw this headline here. Consumer debt, sorry about that. Consumer debt growth tumbles 50% amid sharp slowdown in credit card usage, decline in student loans. So apparently kids don't want to go to college anymore because of all the requirements, and the college lifestyle is no longer as sexy as it used to be. And revolving credit is, I could blow this up, is declining dramatically. It's still positive, but what's that going to mean for retailers, in particular the discretionary spending sector, like the XLY? And you could see that these moving averages, the 20 period in green, the 200 period in red, are acting as declining resistance. And we're probably going to see a rollover on Stokes. Energy, another good day. A great question was asked earlier about what would happen if there was war in the Ukraine. Energy prices are going to go through the roof. They're just going to skyrocket overnight. Volume, light. Emerging markets were up, but they pulled back and turned red on the day, along with the rest of the market. Stokes are rolling over, potentially a lower high. Gold. Okay, so the story with gold began last night on Sunday Night Futures Live, where when the price of gold opened up, it really just blew out of the gates. And of course, sellers moved in to suppress the price. But I was watching it most of the evening, and if you check the replay, I kept going back to gold because I just had that feeling that this was it. This was the inflection point. And sure enough, today they brought it up over 0.75 of a percentage point to close right at the highs of the day. And I think this is just beginning. Volume was not wonderful. This really needs to rise. Now, as for the miners, GDXJ, the junior miners, up over 4%. They broke out above resistance. You have a lot of overhead supply here, so I'm not going to say we got to get through one resistance level or another. There are a ton of resistance levels here. So there's a lot of overhead supply. Volume rose to slightly above average. That I love. That's institutional accumulation. Nugget up over 6% on the day. That long option trade, the bull spread, is now profitable. I did put out an order to sell covered calls. Normally by the end of business on Monday, I have my covered calls out there. But I didn't want to be too quick to cap out our upside gains, just in case they gap NUGT up tomorrow. So I tried to sell the 5250s for definitely a higher price than what the market was willing to pay. That's why it didn't get filled. But frankly, I wasn't all that motivated. I think that we can get another move up higher here, and then I'll look to sell the covered calls. Volume was outstanding. Silver up over 4.75%. We recaptured the support level. We have higher lows. Volume is a little bit light. That's the only negative. SILJ up over 5%. Recaptured support. Volume low. Gold money surprisingly didn't close up today. Cal-Maine Foods. Fellow member Franklin asked, is this a potential double top? It could be for all I know. You never know. So I don't think it is. And the reason why I mentioned this chart to Franklin, so I'll share it with everybody, is that this is the macro view, right? The monthly chart, and we are breaking out. We're very close to taking out the highs of last month. I think this rally is really just beginning. DWAC, daily chart. Oh, we closed negative. They sold it off. Last time I looked, it was positive. On volume, no less. I don't like that. We'll keep an eye on this. We may exit this and book our profits. All right, let's talk a little bit about our short trades. SOXL. Why do we short it? Well, this is a dead cat bounce, a counter trend rally. What are our moving averages doing? They're declining. The 20 period is soon going to cross down below the 200 period moving average. This is a bear flag setup. When do we add to this position? We add to it on a breakdown below this lower band of support. When do we stop out? If we close above $49.50, $50 per share, I would stop out. Volume was heavy to the downside. And if you take a look at SOXL on a weekly time frame, last week we closed up, but there was a big fade. We spoke about this on many, many charts over the weekend, that while you may have an up week, all up weeks are not made equal, in that when you get a fade, that means that there was selling into strength. And this week you saw more selling. As for Amazon rallied huge on earnings. Where did it get stopped dead? Right at 32.50. It was up on the day, and then it reversed off the highs of the day. And in the back of my mind was that Amazon is sporting a PE of around 45. So there is room to the downside. And the last time we were short of Amazon was when we shorted Amazon just before the break of the market back in 2020 on the COVID sell-off. So here we are again, but back then I was using options. So with Amazon, if I add any more, it's probably going to be a bear put spread. It just takes up way too much capital to short the common stock. More on that in the future. You take a look at the weekly chart of Amazon. We're right up and into resistance. There's major overhead supply here. So if we close above resistance at around 32.47, we would stop out of the trade. Moving on to PayPal, watch stocks. So PayPal on a weekly chart looks attractive. Let's go to that first. We're nearing the 120 mark, which is support. I think we're going lower than that. I think we're going to overshoot, probably down to 116 per share, 115.50. Why do I think that? It's because when you take a look at the daily chart, we rallied today up to 130 and we were rejected. So you still have a lot of sellers above. Take note of the volume, above average. So I think we're going to break to lower lows. We'll look at that 115.50 mark, and if the market's holding together, we'll look to put on a long trade on PayPal. As for Facebook, the weekly chart, I was watching this all day long, and we were holding on top of support. And this is why it always pays wait to the final hour of trade before you make a decision, because you would have thought we were going to hold this support level. But sure enough, at the end of business, they sold into it, and we closed down below it. I think we're going to come down here to 220 per share, and then we'll look to get long at that level. Daily chart. Stokes is still weak. RSI is still holding above the 20 mark. Look at how they sold it off today on volume. So you still have institutions looking to exit. Also, Peter Thiel, who helped with the initial round of funding for Facebook, has now left the board, and he is a big, big player. And that announcement was made today, I believe. All right, folks, that's it for Market Wrap tonight. I will talk to you tomorrow. Have a great night. Be well.